episode on Talk of Town channel. Here we are under the series Beyond Boundaries, and today we are here to discuss the market trap for the week recently concluded. As usual, I have with me Mr. Prabhanjan Rao, a SEBI registered investment advisor representing Elysian Advisory. Hi, Prabhanjan ji.
Hi, good morning.
And I also have Mr. Ashwin Kumar, the executive director, DA Capital. Hi, Ashwin.
Morning, gentlemen, and good morning to all the viewers. So, a wonderful week. And when you said market trap, I suddenly felt it market trap for a reason.
So, looking back at the week recently concluded, excellent, extraordinary week for the US. Maybe a subdued week for the Indian markets, and the climax with SEBI cracking Jane Street. Yeah. So over to you, Prabhanjanji, for the fundamentals.
Right. Thank you, Ellen. Thank you, Ashwin. I mean, it's been great, as always, with all of you. As Ashwin rightly mentioned, it is indeed a market trap with the Jane Street and all those things falling down. Indeed, is a market trap. So, coming back to the global events, I mean, it was pretty much on the global parameters. It was pretty much the same. The crude was hovering around 67. Even in the last week, it was around 67, 68. Similarly, the dollar index is around 97. The India VIX is about 12.31. I mean, I always say that in anything less than 14 is always good. But
Right.
here, one point to be noted is the CBOE VIX is up by 5%, which on Friday. We all know the reason because of these trade tariffs. It was up by 5%. It is currently at 17.48. The 10-year GSEC yield is about 4.3%, and 30-year yield is about 4.8%. Gold was also pretty much on the same levels. It is about 3,330 levels, almost the same as the last week. Now, to
Right.
talk about what has translated in the global events and its impact is as I would categorize this under the three things. One is the progress on the tariffs, because we have been talking on the tariffs since 90 days. And
Yeah.
what is its impact is going to be on the dollar and the big, beautiful bill which got passed, on Friday. So on the progress of the tariffs, Donald Trump's tariffs order of 90 days is set to expire on July 9th, and
Yeah.
we always expecting that he might extend the deadline, but he's not planning to extend on the tariffs. That's what we understand to hear from them.
Hmm.
And US deals with far more than 170 countries, Ellen, and it's very impossible to make the deals in 90 days. I mean, it was a very ambitious task, but it was always said to happen. Either he could extend or he would roll out the tariffs on his own. So that's what has happened. They're going to send the said 10 to 12 letters a day, hinting a tariff of about 20%, 25%, and 30%. But don't ask how the 20, 25, and 30% does comes. It's just from his hat. So, for the benefit of the viewers, let me just say what is the tariffs currently. It's currently there is a baseline tariff of 10% after the 90-day pause, and the original plan outlines EU was 20%, Japan is about 24%, and India is about 26%. And Donald Trump expects that in August 1 will be the deadline for the tariffs, which they would kick in. And here, if we ask about what is the potential impact on the US and the global economy, is it depends on the size of the tariffs and how much chaos it introduces in the world economy.
Correct.
The second is obviously because of these chaotic environment, the investment uncertainty losses is huge in US. Having said that, it has a great impact on US dollar. If you see in the current year, US dollar depreciated by 10%, and a lot of even Asian currencies or the African currencies against the US dollar has appreciated. Ghana currency has appreciated by more than 20-25%. So that's where US dollar has fled. And though the US economy has not deteriorated, whether the US inflation data or the jobs data or any, for that matter, economic reports, if we see, there is no much change that we foresee or see in the US. Yet, we see the the US dollar depreciating. The main reason is as keep on saying that US can never go back to the era of under 2% inflation and interest rates under 3%. It is going to be, we all need to get adjusted at 4.5%, and inflation will be over 2.5 to 3%, between 2 and 3%, because
Right.
this is a course correction and the current levels becomes the new norm. I always keep saying that. And the tariffs which are going to kick from August drives the inflation in the US economy. It all depends on how quickly the prices are going to get impacted by the US imports. To just give an example, an imports of avocados from Mexico could creep in faster as they are perishable goods compared to the tariffs on the wine which is imported from the France, which has got a longer shelf periods between 6 to 12 months. So how fast the inflation gets creeped in the US economy is what it translates. The second point is the supply chain that gets impacted, especially from the imports from China with higher tariffs, because this has a potential impact of eroding the profitability with the companies, where the companies basically are the turnover driven companies, volume driven companies, you know, and it is incredibly complicated to even administer the tariffs, because we need to understand here is the tariffs is based on the products, is not based on the products, sorry, it is based on the countries. Different countries have got a different tariffs, and which has created a big shift in the trading patterns, you know.
Right.
And shipping container number, if you, I mean, just give an example, shipping container numbers has dropped significantly from China in the US, and major companies are shifting their facilities which are economically good for them. So US currently contributes 20% of the global GDP, and what I personally feel is that we will tilt towards more in Asian economies, because most of the US companies, they would shift it to other Asian countries, where we see a more trade between India and EU, maybe India and Australia. So, but this very positive for India. So, on and all, on the global events, whatever is happening for US, for the Asian economies like India, it is a very good shift. And the
So it's
last,
more or less a shift from the west to the east.
absolutely, absolutely, and which is very good for a growing economy like us. And the last thing which I would always say is on the passage of the big beautiful bill on Friday. 3.3 trillion dollars is what going to be added to the deficit, and this is going to have a long lasting impact on the long term interest rates.
Right.
No doubt it would be a big, beautiful bill, but how much impact it has got on the long term interest rates is where we need to watch and see. The cost of borrowing will actually go up because of the US government have to issue the treasury bills and the government bonds to fund the big, beautiful bill. And the interesting irony here is, who is going to buy these bills? It's the foreigners, and which will tend to drive the dollar up. And this will adversely impact the deficit, which is exactly opposite to what trade tariffs is trying to achieve. So, on one hand, Trump is trying to achieve the reduce the deficit by bringing money by imposing the tariffs. On the other hand, 3.3 trillion dollars is going to, it's not going to actually. We need to see how it it impacts the US economy, and these things will definitely have an impact on the dollar. So this is the
True.
global economy, but whatever they do, it's, for me, it is very, I'm very positive on India in the next, very, as a very long term investor, I'll be very positive on the India because of these global uncertainties.
Before we kind of get into the Indian domestic factors, Ashwin, when how are the global factors looking from a technical standpoint?
Lakshmi, I think, I mean, before that, would like to address one thing what Prabhanjan just, said at the beginning. Uh, uh, India wicks below something below 14 is good, but I beg to differ. As an option trader, I would like a higher wicks to profit better, to have better premiums. But nevertheless, from an investor point of view, yes, wicks at 12.5 is a very decent number. Coming to the global factors, S&P is just on a dream rally. I mean, led by some of the tech stocks, some big names. everything is seemingly bullish for the next week. And it was a truncated week for the US because markets were closed on Friday on account of Independence Day. So it was just a 4-day trading week, but markets are doing well across the, especially US, and I presume it will continue for the next 1 week. There is no data that is suggesting that there's going to be an immediate snap. So this is from the S&P 500 perspective. Coming to the commodities, we have gold, silver, which are quite muted for the week, and so was crude oil. So nothing major on that front, and I don't see any alarm bells ringing at this point in time, at least for the next 1 week to 10 trading sessions, Lakshmi.
Okay. I mean, before we get into the domestic factors, both of you would have come across this fact that Nvidia is now the world's most valuable company.
Absolutely,
That is something
absolutely.
which they achieved during the course of this week. Uh, Prabhajanji, how is the Indian factors looking like, Indian fundamentals looking like? Over to you on that.
Yeah, see, Nvidia is of course, no doubt, has become the world's number one. But in India, if you see the fundamentals, the many major companies, it could be TCS or it could be any other companies, they were only the model itself is completely different. They have not much contributed in the AI factors as such. They were only backing on the back support system to the US economies. So as such, fundamentally, I'm not too bullish on the big IT names. But of course, there are so many gems in the mid cap IT sector where they are trying to do something different. Like I know some companies which are on this platform based, where they are product based, platform based, is where I see a lot of where they also have tied up with a lot of AI companies like Nvidia. So these are the future. I mean, this is the future for us. That's what I believe as far as the domestic factors. I mean, domestic is concerned.
Great. Ashwin, how are the technicals looking like from Indian markets point of view?
Lakshmi, once again, looking at the overall picture, it was quite a muted week for the Indian markets. Of course, when I say muted, it was partially marginally negative. So Nifty ended by about 0.65% negative, and the other big boy Bank Nifty was about 0.75% negative. We spoke about Bank Nifty will have a little bit of selling pressure, and it did, but not exactly as we thought, but it did come into selling pressure.
Yeah.
But overall, if you see the broader markets, there was some unknown not the big names did some of the not so big names did well. I was just looking at the highest gain in terms of sector. Paper sector did the
Yeah.
gain the highest for the last 1 week. But if you're talking about the major sectors, it was overall a muted week. And we also had talked about Nifty being in the range of 25,500 to 26,000. So we closed at about 25 430 or 440 for this week as on yesterday. So it was a fairly silent week for the markets within a range. And now we can always go back, and especially the first thing that comes to an option trader is, why couldn't I have sold when I knew that it's going to be range bound? Why couldn't I have sold at 26,000 call and at 25,500 put? Look, these are numbers which can always change. Now, if you suddenly look at the options data, the 25,500, because of the selling pressure, because of the breach in the 25,500 strike, for the next week you're seeing a lot of put selling at about 25,200. So but 26,000 on the upside still remains as a major resistance. So the range is a little broadening. 300 points is still about 1% broadening. So for the next week the market can be in the range of 25 200 to 25 26,000, if not beyond. But I still believe that Bank Nifty is the one that is going to be under severe pressure than Nifty. So, apart from that, all these sectors again are quite muted. I'm not seeing. I mean, we'll not get into any stock specific details here because of the constraint that we have from the regulator. But overall markets, I'm not expecting any major fireworks in the market for the next 1 week to 10 trading sessions. With always saying that market can always surprise us.
Yeah, I think two important factors from based on what both of you mentioned, right? So I'm able to correlate the fundamentals and technicals here. Prabhajan did mention about the deadline of 9th July for the tariff, and maybe markets are seriously or sincerely waiting for that date, and
Yeah.
expect markets could be sideways, possibly, and leading up to the 9th, and then based on the boss what is going to announce, uh, we could see some reaction thereafter. Second interesting factor is in our previous episode we did mention on the levels on both call and put on the range. I think markets are have closed well within that range. I think that is something which we've been quite successful in giving our viewers. Of course, we're quite eager to see how the next week pans out. For our viewers here, do stay tuned for more updates from our channel. And as usual, important disclaimer: this is purely for educational purpose, and none of this constitutes an investment advice. Please do consult your financial planner, financial advisor before initiating any investments. See you soon with the next episode. Until then, stay tuned. Thank you.
Thank you. Thank you
Thanks,
all.
Alan. Thanks, Pravanjan.